Hello everybody, welcome to another update on the stock screener. Today I'm going to talk about a new gem that I found, and I got this idea from a list of stocks that was sent to me by another investor. And this one was the only one that stood out, which I'm willing to buy right now, today. And why is that? I will show you. So we have a market cap of 100 million, and revenues are growing and it's profitable. Okay, so let's take a look at the earnings first. So we have an earnings of 10 million per year. So we have already a PE of 10. So this is not overvalued. This is also not undervalued based on the current earnings. But there's more, of course. Okay, price to book is still high, but we are going to talk about the fundamentals now. Okay, so what is this? This is a fertilizer company, and everyone knows that fertilizers are going to skyrocket right now because of higher food prices, energy costs. So you need to have a fertilizer company in your portfolio. But this one is special. So they use glauconite. And this is another kind of fertilizer that doesn't have chloride in it. So it's chloride free. And I think this is going to be the future. It has potassium, so that's important for the crops. And these are the products that they make. So it's a revolutionary product, but it's also a profitable product. Okay, so this is their project. Today they are at 600,000 tons per year of production. And this already gives us 10 million earnings at a P of 10. So this is their production now, but next year they are building the plant number 2, which is going in production in Q3, and then the production will be 1,800. So we already have a 3-fold increase by next year. So earnings are going to 3-fold by next year. So it's an easy triple by next year. Okay, that's already a reason to buy it. But there's more. No dilution, it's already financed. Look at this capex. It's only 4 million to build that second plant. So it's very low capex. And next year we will have the 1800, and then a few years later it will go to 5 million tons per year. And yeah, that's a 10-fold increase in production. So in a few years, you have a 10-fold increase in production, which means the stock price will 10-fold. It's as easy as that, because the earnings will 10-fold. And very important, no dilution. They will finance this from their cash flow. And then by 2030, if you're willing to wait 10 years, we go to 25 million production. This is amazing. You are going from 600 right now to 25,000. That's a 40-fold increase. Do the math yourself. This is a 40-fold increase in 10 years in production. So I see this share price go up 40-fold. There's no doubt about that. So yeah, you can read the feasibility study yourself. So this is the summary of that. Okay, so it's going to go to 25 million tons per year. That's this number. and that's going to come in 2030. But there's some phases here. Phase 1 is already done. Phase 2 is in progress for next year and 2026. And then they will go to the super phase where they increase 40-fold the production. So they have enough reserves to do that, 700 million tons. So that's about the mine life of 30. So very high mine life. They have a lot of this K2O product. So capex for phase 1 is already done. That's 3 million. Capex for phase 2 is, I have it here, 17 million. So that's easily financeable because they already have a 100 million market cap and they are getting a lot of cash flow. So phase 1 and phase 2 are pretty much financed, and then they will go to phase 3 in a few years. So the NPV of the project, of the whole project, is 2 billion. So we are going to go from 100 to 2 billion in 10 years. What's that? That's a 20-fold in just 10 years. This is a very good project to invest in. Look at this internal rate of return, 300%. Normal gold mines have only 30% internal rate of return. This is 10 times higher, 300%. Operating costs are going to go down when they go to the next phase. So that's also good. You increase production and you decrease the cost. That's what we want to see. And you can see here how the revenue will grow. So we are now at 50 million revenue. And last year we had 6 million in EBITDA. And this is in Brazilian real. So you can see the EBITDA margin was 6 million divided by 35 million revenue, which is 17% EBITDA margin, which is low. But in phase 2, we are going to go to 70% EBITDA margin. Because here EBITDA is 452 million and revenue is 580. So I put it here. You have a very high EBITDA margin. This is unbelievable how high this margin is. And phase 3, we have 1.4 billion divided by 2 billion. So we have 70% EBITDA margin. Even Relic Health doesn't have that EBITDA margin. This is unbelievable how high this margin is. And they are sold out. The product is sold out already. Everyone wants this product. So this is my gem. Going to buy it right now, and I'll see you in the next video.